So good evening, welcome to the Maison Française. We're delighted to welcome you to this event on reshaping public finance and private investment to mitigate climate change. This is a conversation with Claude and Bolton, and it's part of a series of events that we are organizing here this fall on climate change in anticipation of the climate conference that will take place in Paris in 2015. Our event this evening is co-sponsored by the Maison, the Alliance Program, SIPA, and the Earth Institute, and is made possible with funding provided by the French Cultural Services at the French Embassy. So I'm just going to keep my introductions very brief so that we can get into the heart of the matter as quickly as possible. Claude is currently Professor of Sustainable Development at Sciences Po, Paris, and also teaches at Columbia. He's the president of the Scientific Council of the Institute for Sustainable Development and International Relations, or INRI, which is a nonprofit policy research institute based in Paris. He was originally trained as a physicist before turning to economics and taught and did research for around 30 years at the Claude Polytechnique as head of research in economics and professor of public and environmental economics. And his newest book was written with his colleague Laurence Tubiana, who spoke here just a couple weeks ago also on climate change. And it's about the use and misuse of natural capital in response to climate change. It will be coming out at the beginning of next year from Columbia University Press. And Patrick Bolton is the Barbara and David Zelaznik Professor of Business and co-director of the Center for Contracts and Economic Organization at the Columbia Law School. His areas of research interest include contracting issues in corporate finance and industrial organization. And he's interested, among other things, as we're here tonight, in examining how private financing can be used to support the transition towards greater sustainability. So please join me in welcoming Claude and Patrick Bolton.
Big conference, which will take place in Paris in November, December. I think that taxes and climate on one hand, taxes and financial markets on the other hand, are two important issues, very important issues, which might be somewhat forgotten at the Paris conference. If you go to Burgundy, visit the Citeaux monastery, which is a model of all Cistercians, and on a wall there you will read "Le moine cistercien habite le monde comme l'hôte. L'hôte se sait de passage, il veille à traiter avec égard ce qui lui est simplement confié." Translation might be, the Cistercian monk is invisible as a host for a limited time. To what is entrusted to him, he manifests respect and care. It's a pity there are just a few Cistercians. Fortunately, there are far more Swedes, and Swedes are, as far as climate is concerned, good substitutes for Cistercians. However, not enough. If you remember that for one Swede there are 34 US citizens and 148 Chinese. It might nevertheless be the case that Sweden opens a way that others might at some point decide to follow. That is a tentative justification for using a few moments tonight discussing Sweden and climate. then I will try to assess what it means for the rest of mankind, in particular in the perspective of the COP21 in Paris at this time. Let's go back to 1972 in Stockholm, the first UN conference on the human environment. 37 countries, now 200. And each country was asked by the observers, by the organizers, to prepare a kind of little book on the environmental problem it considered most important in its case. And for Sweden, the book was devoted to SO2 emissions, acid rains, as it was called at the time. Waldsterben, as Germans say. It still is an interesting booklet to read, and especially the chapter on what economic instruments might be used to tame the SO2 emissions, which was really the issue at the time. In the United States also. You know, the forests in Sweden are mainly fir. They are not deciduous, so they accumulate the pollution. They don't eliminate with the leaves each year. And the lakes, the thousands of lakes you have in Sweden, are naturally acid. So a bit more acid, and an acid rain is sulfuric acid coming from the sky. A bit more acid destroys mainly the fishes. The Swedes love their second-hand homes at a corner of the forest along a lake, so they were really concerned. And what the chapter on economics in the Swedish book in 1972 recommended was just price the damages, price the emissions which create the damages. And the reaction was extremely negative from both the general Swedish opinion and from the Swedish government, the social democratic government. So,
I see people looking about how to get into it.
It was especially negative from the Green Party. The Green Party said it's scandalous to pay for nature. So nothing happened for 15 years, a long time. The opposition was fierce, but the emissions got more and more serious, the damages greater and greater, and public opinion more and more anxious. In 1988, a general election for parliament in Sweden was coming. So from 86 to 88, there have been long discussions in the perspective of this election about pollution, forests, lakes, and so on. It happened, small events may have sometimes important consequences. It happened that the Green Party are accustomed to such events. The Green Party had a kind of coup d'etat inside. In Spanish, I would say golpe. And a new president took charge. And he had a stroke of political genius, which proved to be also ecological genius. He, in a press conference, not long after his election, at the head of the party, in a press conference, he said, "We have been wrong. We are nowhere with just administrative rules and goodwill and so on in taming the emissions. The economists are right." But it's clear that if you put price on emissions, on the damages, you will not make them disappear completely. There will be a residue, and on that residue, the state will get revenue if you tax the damages. We want that all that revenue should be redistributed in the form of reduced taxes on, for example, personal revenues, personal income, or firm income. I was told by an English colleague who happened to be Mrs. Thatcher, advisor in matter of environmental economics, that when he was informed of that, he said to Mrs. Thatcher, "You know, they have invented the double dividend. They will tax things which destroy resources, so the destruction will be reduced. And at the same time, they will reduce the tax on things which are good for the economy. We have to tax them because we need revenue, but the less we tax them, the better." The double dividend. Mrs. Thatcher was very much impressed, but she lost power within the next 6 months. Not for that reason. So after that press conference, the Social Democrats immediately understood how important it was politically. And they jumped in the train, made an alliance with the Green Party on a program of broad taxation of the damages on natural resources and reduction of taxation on other activities. They won, and it's not always the case. They did exactly what they had promised. In 1990, Sweden had a unparalleled law on economic instruments and the environment. And they were serious, not like our former president, who was just satisfied with a small tax in the corner. No, it was a comprehensive and very large tax reform. They introduced taxes, that is prices, on all activities that created damages to the environment. The most spectacular one was on SO2 emissions, of course, that was a concern at the time. $4,000 a ton of SO2 emitted. At the time, 100 times the tax in France, for example, than in most countries. It worked. Within 10 years, the pollution was reduced by 25%. And they taxed also, for example, that requires some political courage. They taxed all the chemical inputs in agriculture because of the indirect pollution that we create, that they are used to create. Difficult to imagine that in other countries. And that was really pioneering. We decided in 1990 to tax CO2 emissions. They were cautious. Well, they said they were cautious. It would be a small rate, $35 per ton of CO2, something which is still considered as crazy in this country, for example. And with a program of increasing that along a trajectory which in 1996. In 1996, yes, by $53 a ton, 2004, $130 a ton, and now $150 a ton. Crazier and crazier every year. The greatest incredulity in other countries concerns the fact that Swedish prosperity was not destroyed. A few figures. Between 1991 and 2012, Swedish GDP increased by 58%, and emissions were reduced by 20% and will be, because of momentum, by 40% in 2020. The burden of taxes on everything which is not taxing the resources and the environment was reduced from 55% of GDP to 45%. Doesn't seem that the extremely bold policy with respect to climate that the Swedes implemented has made their economy more fragile, possibly reversed. I must say that for a few firms, a few activities which are very open to international competition, the rates are divided by two. Divide by 150, it remains 75. What I have never been able to explain to our politicians in France, including President Sarkozy, is that you don't introduce rates like that out of the blue, in isolation. It must be one element of a broad fiscal, economic and social policy. That's exactly what the Swedes have done. They have developed innovation policies to be able to substitute other sources of energy, for example, for coal or gas and so on. And they also have very cautiously tackled the problem of social inequalities with respect to the consequences of the introduction of these taxes. If you live in a faraway suburb where there is no public transport, you are a victim of such a move. Clearly, what should not be done, and what has been tentatively considered in France, is to make exception on the taxes. You have to compensate in ways which don't destroy the incentive that your taxes, that your prices are creating. For example, a comprehensive plan of extension of public transport by train and buses has been implemented at a rate which just followed and anticipated the increase in the taxes. Collective heating has been developed, because in collective heating you can more easily substitute new renewable fuels for fuels which are not renewable, and so on. I have written a paper for sale this evening, and you will find detail on that in the paper. So, CO2 taxation to reduce CO2 emissions, and they very much succeeded in doing that. There is no traditional fuel now used to heat houses, for example. You need to heat houses in Sweden. And that has been, in a certain sense, pushed by the taxes and made possible by the innovations. Well, now let's take a more broad view of the problem. It is clear that the program of taxation of natural resources, of damages to the natural resources in Sweden, has been in the interest of Swedes. They have at the same time reduced pollution, of which they are victims, and they have at the same time developed their activity. They have grown very well. You cannot say that for CO2 taxation. One Swede, 34 Americans, 148 Chinese, it's clear that a tax in Sweden, even a tax at $150, really unimaginable anywhere else now, doesn't make a difference on climate change. So what's the rationality there? It's clearly not the rationality of the standard economic text. But that doesn't mean that it lacks rationality. The management of the implementation of the 1990 law, the development of that policy, is in the hand of an all-party committee in the Swedish Parliament. The government cannot make anything or cannot oppose anything against that committee. And that explains that when the Social Democrats were beaten by the right in Sweden, it doesn't change anything on the course, the overall course of implementation of that law. And that committee has developed a philosophy where you can find elements of rationality which are clearly not the orthodox economic rationality. The overall goal of Swedish environmental policy is to hand over to the next generation a society in which the major environmental problems in Sweden have been solved without increasing environmental and health problems outside Sweden border. And as we are young pioneers, we have a duty to go on pioneering. Maybe one day our experiment or example will be useful for others. Not exactly the philosophy in the US. The American way of life is not negotiable. George H.W. Bush at the Rio summit. Yes, okay, it's not negotiable, it's not sustainable. We cannot blindly accept that protecting the climate in humanity's common interests, national interest should come first. That's Yu Pingtai, China's special representative for climate negotiation till 2010. Sweden is not alone. For example, British Columbia has introduced taxation of CO2, and the results are interesting. 16% reduction of emissions, while Canada, on average, increased by 3%. Other countries in Europe, mainly the Nordic countries, have followed suit, maybe to a level of Sweden, but to levels which are very reasonable. Norway, Finland, not Denmark. Denmark is a different approach. The Netherlands. You have also states in the US, provinces in Canada, and Chile. No, Chile has a market. No, Chile has a tax. Chile is also in the forefront not at the levels of Sweden, but still in the forefront of taxing CO2. But you have California, you have Quebec together, which organize a cap and trade market. And we have been told that China will do the same shortly. That's not much. That's not much. And I think I might say that with respect of using economic instruments, maybe taxes, maybe cap and trade on CO2 emissions to reduce them. From that point of view, the Paris Conference is already a failure. I bought this splendid book this morning here at the bookshop, Columbia bookshop. Big World, Small Planet by Johann Rockström. Johann Rockström is one of the most influential persons on the planet on natural resources, natural capital. He is head of the Resilience Center of the Swedish Academy of Sciences, and by the way, he's a member of the Armed Scientific Council at the EU in Paris. And at some point, he stresses that nothing serious from his point of view may be achieved without meaningfully pricing carbon. Recently, Martin Weizmann and a colleague have produced a book on the shock of climate. Martin Weizmann is one of the 2 or 3 most influential economists on climate change. And they have the same position. George Stiglitz recently told me that with the determination which we know, that without carbon pricing, COP21 in Paris is a charade. I have a friend who is in Bolton, Philadelphia, and a specialist of economics of insurance. And from time to time, he testifies on Capitol Hill. And recently, he has been warned just not to mention the word climate change when he testifies. It seems that mentioning the word taxes, price on carbon for the COP21 is equally forbidden. Let's finish with Martin Wolf. Martin Wolf is the chief economic commentator, as we say, of the Financial Times. And in one of his columns, he has to recognize that we collectively do not seem to be prepared to make sacrifices to mitigate the emissions that we see. And he tried to understand why. And here's what he says. Why should we now here bear costs of mitigation for the benefits of those we will never know, even if that includes our own descendants? After all, the indifferent might ask, what have future generations ever done for us? The conclusion is, how far down this path we travel before we decide or are forced by events to change back. In the short run, the focus will inevitably be about jobs and growth, but currently, the future tends to be a succession of short runs.
questions until the second presentation, and then we can have a discussion back and forth in time for Q&A. Thank you so much.
I will take advantage of having the microphone in front of me to react to some of the things that Claude just said. I should mention first of all that Johan Rockström, he was actually here in Colombia a couple of weeks ago, and basically he talked about his book and other things.
You see him?
Yeah. So let me make a few comments on Claude said. So Claude said a number of important things, showcasing the example of Sweden. Now, of course, for those of you who watched the presidential debate yesterday, you heard Hillary Clinton say Denmark was all fine and good, but the United States is not Denmark, right? And you might have reacted similarly to Claude's comments that Sweden is not the United States. But I think Sweden does show the way on taxation, and in case you thought well, maybe this is not going to go down well in the US, it's interesting to note that Greg Matthew, who was the head of the Council of Economic Advisor in the second Bush term, has always been advocating for some form of carbon tax. And recently he has been basically speaking out for something very similar to this double dividend idea. So it's not like there aren't also voices over here that are picking up on these themes. The other point I want to mention is I'm a newcomer to this question on climate. I'm more of an expert in financial economics, and I've come to this field from the perspective of a financial economist. But Claude and I go back many years. I was actually a member of his research lab in the collaborative over 20 years ago, and I've been invited by Claude to a number of conferences on climate. I remember one in Paris 10 or 15 years ago, and a recent one 5 years ago here in Colombia. And the theme 5 years ago was, you sounded pretty pessimistic 5 years ago, maybe just as pessimistic as today. But if I know what happened in the last 5 years, there's been a lot of progress. One of the things where there's been enormous amounts of progress is coal. Coal is the main contributor to CO2 emissions. And there's been a turnaround in the last 5 years, which I think was unforeseen, even not foreseen 5 years ago, how quickly the world would wean itself off coal. Coal is now increasingly widely accepted to be a stranded asset. And it's reflected in how multiple countries are putting in place policies to either stop building new coal power plants or decommissioning existing plants or decommissioning plants. That's happening in China, it's happening in Europe, it's happening in France, it's happening to some extent in the US. So that's a big positive development.
China. It's not at all happening in India.
It's not happening in India, anyway, so that's a positive development in my view. Second positive development, and again I think probably not fully foreseeable 5 years ago, is the reduction in the cost of renewable energy, whether wind or solar. And again, this is to some extent due to big investments in the production of solar panels, taking advantage of returns to scale. this has brought us to a point where today, well, solar isn't quite as competitive as fossil fuels, but it's getting there, and it's going to contribute to making fossil energy, coal, oil, possibly tar sands, stranded assets. So I think that these are good positive developments. And you mentioned this one suite for 145 million. What I'm hearing today is that if there's one public opinion in the world that is really pushing for climate mitigation and action on climate, it's the Chinese population.
Is there a public opinion in China?
Well, there is some of you may have seen this video that was posted in China under the dome. This was a video that was posted and downloaded before it was pulled off the website in China. It was downloaded 200 million times. So the public opinion is there. Now, of course, it's not organized politically, but it is expressing itself. And one reason why the video was taken off was because there was a party meeting and the government didn't want this to be the topic that would overshadow everything else. But it is driving policy action in China, and we're saying, COP21, yeah, we're not nearly there where we should be. But compare Copenhagen to Paris, one major change has changed in the Chinese position, and that has led to very substantial transformation. So, maybe I went on a little bit too much reacting to your comments, but I think it's a transition to what I want to, what I want to talk about, which is how can financial markets complement government action or anticipate government action? And it's fair to say that 3 or 4 years ago, this was really not on the radar screen. Now, although we're still very early days today, progress has been made, and it's become a topic that people debate on the fronts, and so that's encouraging. So, in terms of thinking about where financial markets can help, I think the main idea is that financial markets are an accelerator, because financial markets pricing anticipates future developments. So to the extent that future policy action, such as maybe some agreements that will come out of the COP21, maybe some more ambitious programs, cap and trade programs, some more ambitious carbon pricing programs that will come on stream with some probability. We cannot be sure that they will come on stream with some probability. To the extent that these are anticipated, they will be reflected today in asset prices. And that, in that sense, growing awareness by financial markets of carbon risk, climate risk, is an accelerator. It accelerates change, and that's what's encouraging. I think we're still, of course, very early days, but that's how I think we should see financial markets complement government action. Is that they can bring forward what is coming down the road, and so they can help accelerate the transition and also help government implement the transition to the extent that private actors have already started responding to anticipated policy changes. So I think that's really the big contribution that financial markets can bring. Now, what has been done so far? Well, I think a key catalyst has been the role the UN has played a very important role. Last year, this is really through the leadership of Secretary General Ban Ki-moon, who really took the lead in saying, well, the private sector has to be involved in climate. It can't just be 200 countries negotiating some kind of multilateral agreement. The private sector also has to be involved, and in the private sector, of course, capital markets have to be involved. And that has led to a number of initiatives. So there's been a divestment movement. I think some of our students are protesting during the sitting from the faculty house today, trying to push the Colombian government to divest. There's a divestment movement that's really gained traction, not just on campuses. It's also the leadership of the Rockefeller Brothers Fund that has been trying to push a number of institutional investors, foundations, etc., to divest. That's been a good development. And a second important development is a greater awareness of asset managers that they need to be able to measure what needs to be managed. So there's now greater acceptance that there needs to be more systematic, better reporting of how much economic activity is tied to carbon emissions. So investors need to know what the carbon footprint is of the companies they invest in and how much their economic activity, their profits are tied to carbon intensity. They need to know that, and there's been over time better and better measurement and reporting of carbon intensity. Number of providers like Carbon Disclosure Project or CDP, South Pole, True Cost, NSCI has now a sustainable development unit measures and reports on these measures. And so now you can have much more accurate information about who the largest emitters are in the world, which companies emit the most, on the one hand, and you can tie that back in to a carbon footprint or a portfolio. So just by adding different stocks into a portfolio, you know what the carbon footprint is of a portfolio. Now there's been a movement where asset managers, governments now increasingly are calling for systematic reporting of this carbon footprint portfolios. That's a very good development because once you start measuring these things, you can start managing them, analysts will pay attention, and so we'll see more of that. So that's the second positive development. Now, third development is something I've been involved in, which is comes under the term of decarbonizing portfolios. Okay, so once you have a measure of carbon in the portfolio, once you know where it is, you can take steps to offload your exposure to that and reconstruct the portfolio if you want to, such as, for example, divesting completely from coal, tar sands, or oil, etc. Okay? Now, the twist that we've been provided to this and to this debate is that we're not proposing simple divestment policy. That has been heavily debated, and there are some obstacles to divestment for asset managers. I'll mention those in a second. So this is where we're coming in. So what we're proposing is if you want, a middle way, which has the attraction that the asset managers who will pursue this, they will do well by doing good. They will make money by implementing this strategy. So it's not going to cost them anything, it's going to actually add to the bottom line. So how is that possible? So here's the basic idea. The basic idea is you take a classical market index, S&P 500, MSCI, the global MSCI, MSCI Europe. So let's say S&P 500. So what you do is you rank the companies in the S&P by their carbon intensity. Okay? Then you remove from the index the worst performers in terms of carbon emission. Now let's say you remove, let's say 100 companies from the index. And I will left with 400 companies in the index. What do you do with those 400? Well, you rebalance the index, and this is simple engineering. It's a simple minimization problem. You rebalance the index to try and replicate the reference index. In other words, you rebalance the decarbonized index to minimize, that's a technical term, tracking error with the reference index. Okay, so you can essentially, so this is what we found out, you can essentially replicate the S&P 500 with a smaller index. You have exactly the same returns, more or less, 0.5% tracking error. But you have 65% less carbon exposure. How does that work? Well, roughly the idea is, what matters for replicating the index is that you need to have the same risk exposure as the index. So for example, one risk exposure is commodities and energy. You want to have roughly the same exposure because when commodity prices go up, commodity producers are more profitable, that adds to the return of the index. So you want to be there. Now, how do you do exposure to commodities and energy without exposure to carbon? Well, one example would be you sell Exxon, but you buy more of Schlumberger. Schlumberger is a provider of exploration equipment for oil companies. So Schlumberger will do well when the oil price is high because of the lot of demand for its equipment. But Schlumberger doesn't have much CO2 emissions, whereas Exxon will have a lot. So that's one example of how you do it. Basically, you choose between, it's a race within each sector, it's a race between those companies that have high emissions versus those that have relatively less. That's how you divest from carbon without divesting from other risk exposures. And that's how you make money. So the decarbonized S&P 500 has been trading now for several years. The decarbonized MSCI indices have been trading. The one most closely following is the MSCI Europe index. So it's the low carbon leaders MSCI index. That was introduced last November. And by now, it's already outperformed the reference index by 200, and less than 200 basis points, which is huge for index outperformance. So the asset managers that have invested in that, they've done very well this year. I'm not saying that this is going to be it's always going to be the case because the product is not designed to always outperform, right? Because you're trying to minimize tracking error. So the decarbonized index will do well when initially, so in terms of returns, the decarbonized index will do relatively well when initially the carbon risk was priced in by the market, and then the market gradually prices in the carbon risk. For example, because you have COP21 coming, because you have China taking major steps. So the market is reacting.
Or divestment by students.
Or divestment by students, exactly. So the market is reacting to this, readjusting the price of the companies that have a high carbon exposure But if you're already selling those companies early, you're going to outperform the index. So the point is that you can, in the transition period to carbon pricing, as an investor, you can do well while doing good. Okay, so that's really what we're trying to push. Now, the message is being carried. Let me say one last thing about why this is a more suitable approach for asset managers. So, what we've heard from many asset managers, even the most progressive ones like CalPERS, is that they cannot divest because 100% divestment would be in contradiction. This is what they've been communicating. Would be in contradiction with their fiduciary duties to their clients. That's what they're saying. So that they have a duty to achieve the highest financial return possible for their pension. That's what the asset managers are saying. So you can see how divestment creates a problem for them. But our approach, decarbonized portfolio, actually is very much in their mandate. You actually make even more money by decarbonizing your portfolio. So it's not that it's not just consistent with the fiduciary duties. It is your fiduciary duty to invest in this way. And so this is where we hope we will have a lot of language, because there are different investor constituencies out there. Asset managers make a lot of decisions for a huge constituency. This is where the biggest part of the market is. So if you can get the asset managers on board, you can hope to scale up divestment. That's basically the goal. And so, to give you an idea, with the help of the UN, we've created a portfolio decarbonization coalition, which is the members of that coalition are some asset owners and some asset managers. That coalition already has, the latest is over 60 billion in assets that are in those decarbonizing indices. But if you actually look at the entire asset under management of the members of the coalition so far, it's over 1 trillion. It's 1 trillion plus, I forget the exact number. So it's beginning to be meaningful, and this is a very recent initiative. It's happened over 1 year. So we're thinking this is going to be ramped up. With a bit of who knows, 5 years from now we can see if that works. But if you have several $1 trillion in those assets, that's going to make a difference. But that's the idea. It's going to make a difference. It's going to create an investor constituency that will support government action on carbon taxes. It's not going to be all the business community, investor community doesn't want to hear about taxes. It's going to be divided constituency, those who take action to benefit from carbon taxation, who will actually support these government actions. So that's the spirit of the initiative.
Very interesting. I'm going to suggest that maybe, Claude, do you have comments or responses to Patrick's presentation? And then we can open up. I have a couple questions, but I'd like to open up first to the audience. So be thinking about your questions for both speakers, and we'll hear first from Claude in response.
Only the fact that it came to my mind that the militants, that's the divestment movement, can help the reasonable people win, because they create the conditions where the decarbonized portfolios do better than those which are not decarbonized. So it's not Generally not the case, but the far left helps the left.
I'd like to open it up to questions. Yes.
Yes, I have, first of all, thank you very much for your presentation, which is it's amazing. I have one question for Professor Bolton. Did you track the index, the decarbonized index, on other criteria such as creation of jobs and investment? Because in the example you mentioned, I can imagine service companies would be less carbon intensive than manufacturing companies. And so is there a link with capital intensive companies versus low intensive net capital? And the same with employee.
Yeah, so the more you can do that, the better. The constraint is how much tracking error do you introduce in the decarbonized portfolio. So you can construct a decarbonized portfolio which is zero exposure to carbon. Essentially, you will divest from energy, some manufacturing, mining, all that stuff. But if you go towards zero exposure, you have a pretty large tracking error. It's more like 3%, 4%. So you can't. So the idea is you don't go full way. You go halfway, or a little bit more. And so the way you go halfway is you reduce a little bit your sector weighting on the highest emission sectors, energy, mining, and so on. But you retain some exposure. And then, of course, you reduce your exposure to those sectors, you can increase your exposure to other sectors, such as services. But you're going to face this constraint that you want to maintain a low tracking error. So, yeah, from a point of view of if your only objective is to divest, this is not a perfect problem. But I have to say there's one advantage though to the way this market is designed, and that is that it introduces competition within a sector among the companies that are close to being in the decarbonized index or not. If a little bit of effort reducing the carbon emissions, maybe what flips the choice makes you be a constituent in the index versus not, and that's that creates incentives. That's a good sign of the design.
The concept of stranded assets. In your scenario, I like your scenario of decarbonizing a portfolio. What I didn't really like was going with Schlumberger instead of Exxon because it's still an oil services thing, and you're assuming a high price for oil, which I'm not sure would stay. So I'm still worried about that $21 trillion of quote fossil fuel assets and the market, which I was at the UN and I said, markets are not perfect. Those people that are complaining could really have an impact on an ExxonMobil and all that big asset. Like you said, it's capital intensive. How do you see that? Because I really like your idea of decarbonizing, but I'm not sure that the Schlumberger would be...
No, it's not necessary.
Right, you know what I mean? In other words, maybe I go more renewable and really... But then on the other hand, what's bothering me is all that capital that's possibly stranded. Big numbers could really hurt pension funds like CalPERS, right?
Absolutely.
Right, because they're going to have exposure, right? And the market, I just don't trust the market that it wouldn't go like this,
No, you're absolutely right. And, so stranded assets can be used as a criterion for construction of the decarbonized index. So you will, among oil companies, for example, you will pick the company that remains in the index that has the lowest stranded assets. Could be one criteria.
Which company would that be?
Well, you shall.
I thought
Yeah, I mean, it's working. I mean, I think it's remarkable how I was at a conference in May, and everybody at the conference said it's crazy that the Shell was allowed to do the exploration in the Arctic. That it's got to be a stranded asset. Everybody said it's not crazy because it's bad for the environment. People just said it's crazy. It's got to be a stranded asset. And sure enough, a few months later, Shell decided to abandon it because it is a stranded asset. It's very costly, and the returns are not going to be there because the oil price is not going to be high enough to justify those investments.
Yes, the background.
This has to do with Sukat's comments about the taxation of fossil fuel emissions. So what I'd like to ask is, what kind of role has the government tax breaks on like investment in renewable energies played in all of this, in contrast to taxing the emissions?
You mean on the origin?
No, I mean,
Just subsidies to renewable energy. That's your question, right? Subsidies to renewable energy, right? Tax
Yes,
breaks.
yes.
Yeah, exactly.
To a certain extent, it's complementary. You create, by subsidizing, you create incentives to use resources that are virtuous substitutes for the resources you don't want to use because they create emissions. But if you subsidies also raise problems because you need public finance, and there is a scarcity on the use of public finance. But I think that the most important point to consider is the role of subsidies that might be perverse if they block innovation. For example, subsidies of huge subsidies on traditional solar panels, I would say first generation solar panels, have made it very difficult for more advanced equipment. For example, very thin films of solar cells to come to the market. It has been a brake on the diffusion of innovation in the sector. And in Germany in particular, it has been a terrible drain on public finance. So subsidies are in general considered as positive by economists when they accelerate innovations, they accelerate the introduction of new equipment, which of course have a learning curve, which when it's starting is of course very costly for the producer of these equipment. But if you use subsidies in such a way and to such an extent that you block the possibility of learning along the curve, then it's not very positive. In a certain sense, the main argument, I think, about subsidies is the Schumpeterian one, is the argument from the point of view of the following generations of innovations and the fact that you should not block the life of the succession of generations of innovations. In solar, it has been really, it is really a problem. Not in wind, because wind is not so much dependent on the succession of innovations. We more have innovations, I would say, not marginal, maybe important, but anyway, it's innovation which improves the existing technology. For example, in Texas and in the Midwest in general, they have improved the windmills, the machines, in such a way that they can now function under much stronger winds, in such a way that they function for maybe more than 3,000 hours a year instead of 2,200. In subsidizing that, you don't block anything, because it's not a question of generations of innovation, it's a question of incremental, even if they are important, and they are important here in America in that respect, incremental innovations. So there is no general answer to your point. And the main reference to answer, to discuss the point you have raised is how does it impede or boost innovation? And we have quite a lot of different kinds of innovation. And in that sense, renewable is not uniform. Wind and solar, if I may say, are very different.
Yes.
Thank you. This is also a question regarding taxation. Amongst my carbon tax friends, one of the debates has been over the potency versus the undermining of the carbon tax through the elasticity of demand. So if a carbon tax is imposed on fossil fuels, at what point do those taxes simply get passed through to consumers, and how sensitive will consumers of fossil fuels, etc., be? At what point and at what value does the tax really start to bite, and at what point is it simply just pass through and becomes harmless in terms of fossil fuels?
I think one important thing to consider is that when you modify prices, and you modify prices by taxing, there are other ways, but taxing is a modification of price. And here, it's a modification of price which is introduced because the natural price of a market doesn't reflect the use of resources that you make. When you do that, the main objective is changing the incentive to change the behaviors of consumers, of companies, and so on. But as we say in the language of economists, some demands are more flexible than others. When you introduce changes in price, by taxing, for example, you will have mostly in mind the flexible demands, those which can be changed by the taxing, of course, hence it's no point to do it. But some demands are not flexible at all. For example, the example I took in my presentation, certain people, even in Sweden, were prisoners of the use of their cars. And their cars were cars which maybe were, especially if these people are not very rich, old cars which were not very energy efficient. Exactly the kind of cars you want to have out of the market. But what you want to have from the point of view of emissions is in conflict with what you probably want to have from the point of view of equity between people. So the extreme importance to find ways to correct these situations without losing the incentives. In Australia, in France, the governments didn't understand that. And they tried, there were protests, they tried to correct the effects on people who could not adjust by just making them free of taxes. And when you start doing that, there is no limit. So it's very important to find ways to go around the situation of these people, which cannot be ignored by ways which are not destroying the incentives you have put in place. And that the Swedes have done very well. But it has costed new train lines, bus services, and so on. And also subsidized, yes, for cars which were not running on fossil fuels. All sorts of ways which could mitigate the equity problem without destroying the incentives which are linked to the efficiency of the policy.
Yes.
My name is Tanya. I come from a Chinese NGO working on climate change issues. I have another question, which is, does the term green finance or impact investment also include some sustainable financing issues, such as the equator principles and the support of environment-friendly issues? Environment-friendly loan payment. For example, before a bank issues a payment to a certain company, we need to check the compliance of that specific company in order to make sure the money is used in a way which is environmentally friendly. Would this be considered in today's topic or maybe in your scope of work? Yeah, and any prospect for the coming decade in terms of equator principles or green finance? Thanks.
So one area I have not talked about, and you reminded me, is green bonds. I think that it's the closest to what you have in mind. So the way green bonds work is you get the green label if the bond is collateralized by an asset which is sustainable, either a renewable energy asset or low carbon emission asset. And that's a segment that has grown quite a bit. Yeah. And there's demand for those bonds. There are investors who care about whether the bond is green or not, and they're willing to pay a little bit more. Holding a green bond versus a non-green bond, and that's fueling that market. But I mean, the broad idea in all of these issues is what you said: is someone has to do the work to determine the environmental impact of the activity and of the investment. Someone has to do the work. You're relying on that data, but there are more and more providers of that data, and then once it's there, once it's measured, investors can step in. That's basically it. But we are at the point where investors can do quite a lot. There is now good enough data that you can do quite a lot.
Alicia?
So, Patrick, you teach at the business school here, and Claude teaches at Sciences Po. So, to be simple, you train those people who are in this financial world, and you train these people who become a political leader. Are those schools preparing in the correct way the future generation? Or do you feel the curriculum, for example, of a business school like the one of Columbia or in general in the United States is including enough of knowledge and exposure at a very early stage? And same thing for a place like Maison School. Are we training this new generation the right way?
No.
What would you do differently?
We could do it differently.
At Sciences Po, I think that the best way is, the largest sponsor of Sciences Po is the very big insurer, AXA. And AXA has decided clearly to go Patrick's way. What Monsieur de Castries, CEO of AXA, says is parole d'évangile for the director of Sciences Po. So that's the way.
So it's the other way around.
Yes.
Okay.
And no, not at this moment, but 6 years ago, he was delivering a lecture to the students on these subjects. Monsieur de Castries, in presence of Monsieur Mignon. So I think that the idea might get in another way.
As far as the business school is concerned, I would also say no, there's not much internal education of students. We've been a bunch of professors getting together saying we should offer a course, but the truth is we are not offering a course at the moment. We should.
One last question.
Can you speak a little bit more about how the major banks have been involved in creating the C's, green bonds, and things like that? Or is it something that's limited to more of the smaller alternative investment companies, or have any of the major banks gotten on board with this?
I'm not sure I understood the question you were asking.
In terms of people investing, are they mostly? I know that some of the major banks have started indices around other responsible investing, and was wondering if, for other sort of affinity groups and things like that. So I was wondering whether you've seen a movement like that in terms of environmentally sound investing with those same banks.
So you're asking in the U.S. banking community?
Yeah, in the major U.S. banks.
So the short answer is the U.S. is behind the curve on socially responsible investing. If anything, Europe is ahead of the game, but U.S. is catching up. And I think someone who's really very much on the ball and has understood the importance of this movement is the CEO of BlackRock, who has been basically making noises that wants to position BlackRock in this space. Socially responsible investing, reinvesting, etc. And if you think, it's the largest asset manager in the world, is really responding to a growing public opinion, especially among the younger generations. And it makes sense. It makes sense that they should respond. But the reality is, U.S. asset managers are, at this point, they're behind the curve on this relative to Europe.
So thank you very much for such an interesting discussion, and thanks to all of you for coming. And let's hope for more improvement in the next 5 years. Thank you so much.